Hi, this is a video live seeing the Bitcoin price going near $1,000.
It is my pleasure to announce that a special guest of today's podcast is none other than Marc De Mesel.
I did not expect this to happen so soon.
Marc is a self-taught investor with over 20 years of experience, living adventurous lifestyle and making several legendary calls along the way.
It was an explosion.
Not only did he accurately predict the 2008 crash, we also recognized the potential of Bitcoin as early as 2012.
I have also implemented Bitcoin in my permanent portfolio.
His impactful calls include selling Bitcoin for $1,000 in 2013 or calling 20,000 Bitcoin top in 2017.
It's really, I think, very important to sell. The gig is up.
But the biggest that I remember is predicting the crash and subsequent V-shaped recovery of COVID pandemic recession.
This crash should not be compared with the 2008 crash. No, a very strong correction, but also very quickly it will bounce out of it. Ignore all the panic around you and all the dooms.
He has been my inspiration ever since, and I hope he can inspire you in the same way. Hello, Marc.
Hi, Dave, how are you?
I'm very well. I'm having a podcast of my life.
Well, I just want to say also thank you. Yeah, you've been an avid follower of my channel, but even more so, you've been sometimes very critical and I had very different opinions. And I think sometimes, your style of communication was hard because you were very confrontational at the time. But at the same time, you were also right sometimes and very right when I was very wrong, especially in 2021. I was still bullish, but you became bearish, and you also warned me of certain things like using leverage, but you also predicted lower prices, and I went through your arguments, but I said, like, I think chances are low. I think we're still in a bull market, and so I remained long, even with leverage, and and you were very right, and I thank you for trying to warn me there. I should have listened much more to your warning signs. That would have saved me lots of money. So I certainly will take your opinion more into account into the future.
And I will certainly try to communicate in a less confrontational, less aggressive way. On the other hand, I am very critical and very picky about influencers, because I think that the space is extremely inflated by them. Also, the subscriber count of lots of these people is very inflated. So I am kind of on purpose. I'm doing kind of like a test sometimes when I talk to these people, because their egos are inflated. But you, I think it doesn't apply to you. And also, this is also why I appreciate you, and my respect for you. You are not one of these quickly cooked analysts or investors, because you've been in a space for 20 years, I think, at least.
I started investing in 1999, but okay, I mean, really taking it serious and reading books about it in 2005 or so.
Yes.
And starting to invest full time with the inheritance I received and stopped doing any other jobs was in 2009.
And some of these guys, they just straight blocked me, and then they got wrecked. And so I think that this also shows that how you handled, like, you didn't kind of take an like insult of your ego or something like that. All of this, if you follow me, this is also why I feel quite a respect for you, Marc.
Thank you so much, Dave, and the same for me towards you. You also shared that you've also had many ups and downs, and I think you're still there investing, and it's really it's many people, they do something for 5 years or 10 years and then they move on to something else, and they never become really an expert in the field, and it seems that you're really on the right track there to keep going, and I applaud you very much for that. And I would say that actually my ego did impact me in 2021. I really got humiliated a lot, losing 90%, actually a little bit more, even 94% or so of my net worth in 1 year. I mean, what else can happen with your ego? It's totally destroyed. And so, but that's good. That's the good thing about being wrong. Eh? If you indeed become much more humble, that's very good to be a successful investor. So it looked like I really needed another great lesson, and I'm happy I got that.
We are going to do 2 podcasts, actually. They will be released separately. So this first would be about my presentation, what I've prepared, something I believe yields lots of value for all of us. And then the second podcast would be devoted to Curtis and his case and his presentation. So what we're looking at right now is current treasury yield curve, okay? And this is, I think, very important to look at, because what we can see that over the past 3 years, that this year, the yield curve inverted. This is something that many influencers by now talked about. And I don't know who started it, but the first guy I personally saw was like 3 months ago, a channel called Interpret Gains. Here is another chart connected to the yield inversion, because as you can see, this is the past 50 years almost, okay? 45 years or 50 years. As you can see in these red circles, that was when we have marked the inversion. We can derive from that once the inversion happens, there is very often, like 80+% times, that some time after the inversion, recession happens. We have inverted this year in 2023, and I believe that we started a countdown to another recession. And the last time we inverted was 2019, and surprise, the next year we had a very short recession, however, 2020, the corona stuff, but it was, and it's also listed as a recession nonetheless. This is another slide which shows roughly the timing that is measured, how many months until the recession once the inversion happened, okay? And as you can see, in 1980s, it was like 17 months, 9 months, 19 months. All things considered, we could just say that like 18 months or so, like the countdown to recession. And another thing to see, by the way, from this chart is that the recession then happens once the yield curve is no longer inverted, because it doesn't stay inverted for long. I think this is the most recent chart I've seen so far. So we are pretty inverted. We are pretty much below the zero line here. So we are pretty deeply inverted, but we are not yet climbing back up above the zero. I think it's not happening this year. Actually, I'm going to derive crypto from this.
When the yield curve comes back out of inverted condition, how many months on average does it take before a recession starts?
Once we become out of the inversion, it's pretty fast. I would say that before 6 months, it usually happens.
Yeah, I think that's also interesting, because of course, a recession is always information that looks back. Like it's actually, when it actually happens, these gray lines, people in the media don't really think yet it's a recession. It's only later when these gray lines are actually being pulled back and the data comes in, right?
Yeah.
Okay, yes, and also as Curtis has been saying often on our podcast, that the stocks tend to rally while we are still in a recession, because the market speculation is front running the actual results. So yeah, that was a very good point, Mark. So the crash might actually appear before the actual recession starts. The crash could actually happen around the reversed inversion point. So when we actually come back to the zero, I think that's where the crash could actually potentially somewhere happen. Now I would like to show you my crypto conclusions that I have made. So for the simplicity of the calls, because I learned that it's very important to keep your calls simple. I have started making a very simple videos called FaceTime videos, and I even try to actually call correctly the little ups and downs as we go throughout the year. And this is the result of my series. I have put it on a timeline, guys. So as you can see here, these pictures, those are my videos actually from the FaceTime series, okay, on my channel. And I have made either green lines and correcting and showing to the spot where I made the video, or red lines and red circle to show you where I made that video or this video. And when the line is green, I was bullish in the video. And when the line is red, then I was bearish in the video. And I started making this series in like 11th of November last year. And the first video I made was Crypto Screaming Buy. And I was obviously very bullish here. So that was a correct call. Then I made another video like it's right to stay all in, or I think it's right to stay all in. And that was just before we actually climbed back from the 17K. And then actually I even managed to be bearish just before short corrections. I was bearish here, and then I was still bullish here because, and it still continued going up. I started being bearish here, and then I was bullish after a small correction. I was even telling you here that Bitcoin will hit 200 weekly. This red line is at 200 weekly. So here I was calling that it's gonna come back to 200 weekly. It did come back. Then I said that, okay, you know, bullish narrative next, and then it happened, the bullish narrative next. And in this video, I'm showing you this this series here on the timeline, because I was the most bearish here around 31K, and I called below 10,000 Bitcoin. And I think that I overshot with the estimate, to say at least. And I would like to talk to you why, and I would like to talk to you so what I think my corrected estimate is going to be. As you can see, this is a screenshot taken from the Marc's video. The video is titled "Why Bitcoin are Likely to Go Down," and this video is from 2019. Marc was saying every cycle we have gone down to like 30% versus trend line in the valuation only. This is like 2015. This is like 2 cycles ago. Yes, there was a retest of the bottom, and we had a 30% versus trend line. And then happened Corona, and again, like 30% versus trend line during the Corona. This is the logarithmic regression today. I think that, Marc, you are using the very same link, because I have this link from you. Fair value, the trend line, is 2.6 trillion. And right now we are just 1.1 trillion at the very moment. So as we spend time below the trend line, we pull the trend line down. But in that meaning, we also change the history. The trend line in the past is also a little bit, tiny little bit lower. And that's why the undervaluation in the past is then smaller, because the whole trend line is pulled a little bit down, so the undervaluation is smaller. So you always, when you want to take these things accurately, you always have to calculate from the point of view of that particular year. So, and I have gone through the data, and I can confirm that in 2012, from that perspective, if you calculated the trend line back there, there was like 20% versus trend line only. Huge undervaluation. In 2015, there was like 30% versus trend line. Again, huge undervaluation. In the Corona bottom, when you calculated it, there was also like 30% versus trend line. Huge undervaluation. And we have not yet gone around to 30% versus trend line in this cycle. But there is a small catch. In 2021, there were literally very, very few people who didn't believe that this will go higher, than the overvaluation will not go higher. Because if you see this chart, it literally shows that the overvaluation should actually end up somewhere here, but it never got there. It never got there, and there were like very few people who call this in the past. And I think that the crypto is less volatile today. And I think this is also how it also shows that we will not see such overvaluations ever again. And because of this lower volatility, I am going to deduct that we will also not see 30% versus trend line this cycle, but I think we can go somewhere like around 35% versus the trend line. This is the undervaluation today, or valuation versus the trend line today. We are like 42%, because this is minus 58, so we are 42% versus the trend line. So we are not yet there. So, and I think that during this cycle, we are going to go around 35% versus the trend line. And I just explained you why. And I also don't think it's going to happen this year. I don't think so. I give you the reasons in the FaceTime video. The reasons are simply because there is not enough long leverage yet to flush people. Long leverage was kind of stopped over the past months, especially in August. Lots of long leverage was stopped. Influencers are bearish. They're calling 23K Bitcoin, 1200 Ethereum and stuff like that, and repeating that over. And people are shorting. I've seen over the past days short leverage coming up. I don't think it's realistic that it's going to happen this year. So I think it's more realistic, it's more probable it's going to happen next year. And the next year, the trend line, the fair value is going to be around 3 trillion. So all in all, if you count 35% from 3 trillion, it's somewhere around 1 trillion, and that's actually where we were just a few days ago or a few weeks ago. So I think, if history is an indication and if I am reading this correctly, my conclusion is that the crypto next year will actually not go that much below 1 trillion. And one last argument for this is that we've already retested the bottom, guys, because also people call for a retest of the bottom, so 18.5K, and we've already done that in March. We've already retested the bottom this year, March. Bitcoin went below 20K, and the total market cap went like 870 billion. But if I'm wrong, and if it indeed will drop to 30% versus the trend line, if I'm wrong here, and maybe even a little bit lower, so alternatively, it would be like 870 billion, and that would be another retest of the bottom. So if I'm wrong, then yes, the retest of the bottom could happen. We never triple retested the bottom. We've always double tested the bottom. And that's why I don't think it would be reasonable to bet on it as a majority chance.
Yeah, I think it's great. Great presentation. I really like you involved the logarithmic regression there. So do I understand correctly? You changed your mind that it would go back to 10K Bitcoin because of the logarithmic regression, or are there any other reasons?
Also, the logarithmic regression. If we go below 10K, then like, oh my God, then guys, it's a cataclysm. And the logarithmic regression, we would be 10% versus trend line. 10, literally even less, we would be 8% versus trend line. And I think that's a undervaluation from which we would not really recover. I think that based on, it would break all the patterns, of course. It would break everything. For that to happen, I think something like really cataclysmic will have to happen, like major recession or NATO versus Russia headlines, you name it. You know, there are lots of doom callers, so we are all inspired.
Okay, yeah, I think it's a great analysis, and I would fully agree there. It is a bottom for crypto, very likely, and I think that picking the bottom is an art that can make you very dirty, as they say. It's a dirty craft. And it's dangerous. You can be shit on. So I think from that perspective, and also like indeed, very good that you point out that like the fair value of cryptocurrency continues to go up over time. And so therefore, even if you make a new low in undervaluation versus the trend line, that doesn't mean in fiat value you make a new low. I think that's very well pointed out. And therefore, yeah, I think that's quite bullish for crypto. Like you're buying something today that, yeah, I mean, is lowly priced, and therefore it has a lots of safety actually. But it's interesting that you also give a low probability that we do crash through the bottom and go a lot deeper. I find that interesting also to hear, because of course it's always, yeah, a small probability for these things to happen. What do you invest in? How does your crypto portfolio look like?
So for the first time in my life, I am 30% in Bitcoin as well. I've never really owned Bitcoin before. The rest of my portfolio, my largest position is in the small project called Laxo.
And the market cap, how much is that for Blackstone?
I think that estimate is what you need. I don't think you need the exact figure. And I think the estimate is, I think there is like 35 million lux out, and the price is $5.1. And I think that it's around 150 million, the market cap mark.
That's very interesting. Any other coins you're invested in, then?
Yes, so 30% Bitcoin, 40% Laxo. I have also invested in another from the list of my reviews, and it's called Chromia. But I think this one is too early, because Chromia is going to have probably the biggest release in their history.
Ah, that's very interesting. Yeah, I thought before that like the war for which layer one network will win was over, and my conclusion at the time was that Ethereum won it, and now I mean, it's not so likely other layer one networks will be able to topple that, and it's just a matter of time before Ethereum becomes the biggest one, and thanks to its network effect, it will attract most of the cryptocurrency applications and will remain the biggest for a decade to come. However, a recent development is that Ethereum has stopped scaling layer one. I heard from Justin Bons, who's running a cryptocurrency fund in the Netherlands. He talks about it regularly. I don't know if that's accurate and correct, the analysis, but if that's true, then yeah, that's it's indeed the fees on the Ethereum network continue to be high. Like why is that? And why is Ethereum not scaling faster so that the fees are low, because they can be a lot lower? That's something I don't understand, and I'm curious to get your opinion on that also.
So my opinion is that Ethereum is really doing all that it can to innovate and to solve this issue. Obviously, it has to solve this issue, otherwise it would lose its market share and its grasp on the dApp world, and to be the number one layer one network in the world. As long as it's innovating, and as long as there is some realistic hope that the fees will drop, and beside of that, we have tons of layer 2 networks like Polygon, Arbitrum, I don't know what else, you name it, that took the fees very to down levels until until Ethereum resolves it as well. So I agree with you that Ethereum is likely to be staying the largest layer 1 network for another time to come. However, I also think that the internet and the world is likely to be multi-chain, and I think that the different use cases or different fields might attract different layer ones as well. And for instance, Laxo is all about the fashion stuff and the NFTs and NFTs 2.0.
That's very interesting. And so you seem to have a very good. Why don't you have exposure to Ethereum then? And why do you choose to have exposure to BTC instead?
This is a good question, and this is the only reason why. Yes, I would put the percentage probably into Ethereum now, but it's because of the dominance chart that I've been reading for years now. It's a very slow chart. As far as the Bitcoin dominance rises, the Ethereum versus Bitcoin goes down.
That makes sense. But can you show a longer term Bitcoin dominance chart? Like, is there a clear pattern that it's likely to, is it likely to hit the 60% dominance again?
If you see this level, this 58% dominance level, which was a major level in the past, Bitcoin spent years and years in this level. This is the red level here. And we dropped from that level in 2021 very suddenly. And I just think it's gonna be retested back at least once, if not twice. In the previous cycles, the Bitcoin dominance also recovered somehow. If you remember 2020.
Yeah, and thank you so much, David. I think you did a wonderful job actually preparing all this, and thank you so much for the invitation and for your appreciation. And I really, I love it. And David, nice to see you. You're looking good, huh?
Yeah, my girlfriend always tells me that you are my clone, you are my older clone, because she always says that you take after me and I take after you, and I also can't deny that I feel connected and that your opinions are pretty close to mine quite often, so I can't deny.
Oh my god, guys.
Bye-bye.
Say bye-bye.
Bye.